Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Friday, 8th August. Coming up on the show, gold futures are on the rise after reports suggest the precious metal could find itself on President Trump's tariff list. Intel CEO hits back after calls for his resignation. He says he has the backing of the board. And the busy earnings season continues. Wendy's and Under Armour have just reported. We'll have the details. So grab your coffee and let's own the morning. Well, the first thing you need to know before that opening bell rings is that gold futures are soaring. In fact, they hit a record high after a report that the US had imposed tariffs on imports of 1 kilogram bars. Earlier this morning, the price climbed above $3,534. It scaled back slightly since then. Interestingly, the price spread between New York futures and spot prices widened by more than $100 after the Financial Times reported the news. It's worth noting that Switzerland is the world's largest gold refining hub. And remember, Swiss exports into the US already face a 39% levy. Overall, US stock futures are looking positive after a pretty mixed session yesterday. Markets actually trimmed earlier losses following President Trump's nomination of Stephen Miron, the current chairman of the Council of Economic Advisors, to serve on the Fed board. He'll take over from Fed Governor Adriana Kugler following her surprise resignation last week. The speculation over who will replace the chairman of the Federal Reserve, Jerome Powell, is certainly intensifying. Federal Reserve Governor Christopher Waller is emerging as a top candidate, according to Bloomberg News. But former Fed Governor Kevin Warsh, who has also expressed support for cutting interest rates, is still in contention. Moving on to our next thing you need to know before the bell rings now, and the CEO of Intel has hit back after President Trump called for his resignation. Lip Bhutan responded late Thursday, calling reports about his career misinformation. In a letter to staff, he said the company was engaging with the Trump administration. Now, Tan was named Intel CEO back in March, taking over from Pat Gelsinger's tumultuous tenure that saw the company's stock plummet and the chipmaker fall behind in the AI race. Investors cheered Tan's appointment, with the stock rising as much as 15% after the news. And Wall Street analysts, as well as current and former executives and employees, saw Tan as the best possibility to succeed in turning around the troubled company. Now, Trump's call for Tan's resignation came a day after one of his top Senate allies, Republican Tom Cotton, wrote a letter to Intel's board chair questioning Tan's China ties. Okay, the final thing to know about before that opening bell rings is that TSMC reported a 26% growth spurt in July, yet more evidence of AI's boom. The world's largest supplier of chips that counts Nvidia and AMD among its customers saw sales hit $10.8 billion last month. The chip stocks coming into focus this week, though, as President Trump offered new details around a tariff on semiconductors. Trump saying on Wednesday there will be a 100% levy on all chips and semiconductors coming to the US. But there was a big exemption for those companies committed to making chips in the United States. Bernstein's senior analyst Stacey Bass-Ragson spoke to Josh Schaefer on market domination and offered a look at the implications of President Trump's tariff comments on semis and who could be the winners and the losers.
This is all part of what was called a 232 investigation into semiconductors and other things. And we actually haven't seen the report from the 232 investigation. So once we see that, I think we can start to be a little more prescriptive about what the actual impacts will be. Like right now, we're just trying to decipher his comments. And look, this is Trump. He makes comments all the time, and sometimes they lack detail and nuance, right? And so we don't actually know what it means. What he did say, you're right. He said there's going to be 100% tariffs on semis, but if you're building here in the U.S., then you'll be exempt. And there's a bunch of stuff. But there's questions. What does building in the U.S. mean? How much do you have to build? What's the time frame? Is he talking about semiconductors? Is he talking about the end devices? Will there be tariffs on just raw semiconductors coming into the U.S., which is actually not that much? We don't import that much. Or is it tariffs on semiconductors in devices? Can customers still use, TSMC manufacturing capacity in Taiwan with no tariff because TSMC is building a lot in the U.S.? I don't know. I don't know exactly how to parse this yet. We will have to wait until we see the actual report. I think, though, the reason the stocks are up is it does look like there will be some loopholes or some reprieves from the blind 100% tariffs. And, there are semiconductor companies and other like tech companies that are investing a lot in the U.S. and trying to build here. And so I think there's a perception, which hopefully at least there's some truth to it, that there will be some reprieve from this. We won't know for sure. We won't be able to really be specific about it until we actually see what is going on when they actually file the regulations.
And so I know this then makes the final question sort of hard to answer, right? But as an investor in the space, is there a winner or loser from sort of what we just laid out, or who's kind of best positioned then given that?
I mean, like the knee-jerk reaction, you'll say, look, companies, at least on the semiconductors, the companies that are actually actively building here, presumably would be, perceived as relative winners. So, I mean, you got companies like Texas Instruments, for example, who are building a significant amount of capacity in the U.S. That is their plan, and they've been delivering on it, and there's more to come. You have companies like NVIDIA. Like NVIDIA doesn't build chips, like they're fabless, they outsource manufacturing, but they're investing a lot of money in the AI supply chain. At least they're giving headlines, so you have that. I mean, you've got fabless companies like AMD or Qualcomm or whatever that actually can use in TSMC in Arizona. And there is a read of the comments that suggests maybe they could continue to use the Taiwan stuff tariff-free. Like we don't know yet, but like maybe. You've got the semi caps. Like again, if we have to build more capacity here in the U.S. at the margin, that's probably incrementally positive for the U.S. semi cap players. So those are the kinds of like knee-jerk reactions that I mean, in some sense, are probably going on today. And again, we'll know more like when we get more specifics.
Okay, time now for a look at some of the top trending tickers this morning. We're watching SoftBank, the Trade Desk, and Pinterest. First up, SoftBank, shares surging to a record high as the company swung to a profit in its fiscal first quarter. The results also beating analyst expectations. The value of the Vision Fund rising nearly $5 billion. That's the biggest gain in value since the June quarter of 2021. SoftBank's results also getting a boost from paper gains on its investments in Nvidia and Taiwan Semi. And SoftBank has been making major investments in the AI hardware space, committing $30 billion to OpenAI and leading the financing for Stargate, a $500 billion data center project in the US. And shares of the Trade Desk are plummeting on the heels of earnings. The advertising software company posting results that beat analyst expectations on both the top and bottom lines, but just barely. One analyst saying the size of the beat was underwhelming given the improved economic backdrop. And another saying expectations for a bigger beat were higher following strong results from Meta, Google and Reddit. The company's third quarter revenue guidance also coming in just above analyst expectations. As part of the earnings report, the company also named a new chief financial officer. But as you see, shares down over 30% in pre-market. Now, finally, shares of Pinterest are also coming under selling pressure ahead of the opening bell. The social media platform reporting mixed second quarter results, while sales topped analyst estimates. Adjusted earnings per share missed expectations. The company's user growth in the US and Canada flatlined from the prior quarter. And that's a concern, as most of Pinterest revenue comes from the North American market. Shares there down pretty heavily. Okay, the IPO market is showing signs of life. Shares of Firefly Aerospace taking off in their first day of trading, soaring more than 30% in its debut. The space company valued at nearly $9 billion. But the stock this morning appears to be coming back down to earth, down around 10% in the pre-market. Now, Yahoo Finance's executive editor, Brian Sozzi, sat down with Firefly Aerospace CEO Jason Kim at the NASDAQ and got an update on the state of the business.
Well, it's all about our people's execution. You heard last Tuesday on 29 July that we just got awarded our fourth lunar lander contract. It was $178 million. That increased our backlog from $1.1 billion to $1.3 billion. So you can see our team is focused on execution and what they're capable of doing. When we give them the guidance, the support, the resources to do their jobs, they're knocking it out of the park.
When do you think you will hit profitability?
It goes back to we're rating up, and as we rate up and we have more launches and we have more lunar landers and more Electras going up there, we're going to hit profitability.
In the first Trump administration, they brought Space Force to life. Now
Absolutely.
It's starting to take more of a shape. How important is that initiative by the administration in terms of what you do and in terms of your business model?
It's extremely important. Being a veteran myself and serving in the Air Force and being a part of the early legacy of the Space Force, I'm a big believer in the Space Force. I think it was a smart move by the president. And now it's taken off with things like tactically responsive space. You're going to see more of those. You see the budgets out there for 2026. They're increasing the tactically responsive space launch budget line. If you look at Golden Dome, that's a big program. Who did we launch Victus Nox for? We launched it for General Gutlein, who's the Golden Dome czar that was confirmed, General Gutlein. So he knows what Firefly is capable of. He's going to see more and more from us as we go public and we supercharge and accelerate our growth.
You brought up a very important point at the top. You view space as a national security concern. Talk to us about that.
Well, space is something that we're all dependent on, and it's undeniably contested. There's U.S. rivals that are doing things in space to take away our freedom of action in space. That's taking away our freedom on Earth. And so it's extremely important. Space is really hard. LEO, MEO, GEO system is really hard.
Easy, man. No, send a rocket and go to the moon. Who else is doing that stuff?
If you have faint of heart, don't go into the space business. It's really, really hard. But that's why we have these bold Fireflies. They do the hardest things in space. We want them to do more of that. And so space is hard, but landing on the moon is even harder.
Well, coming up, crypto stocks getting a lift there on Thursday's trade thanks to President Trump's latest executive order. We've got a look at the action this morning and what the new rules mean for your portfolio. Okay, welcome back. Now, President Trump signed an executive order Thursday allowing alternative assets, including cryptocurrencies, to be included in 401k plans. The news driving cryptocurrencies and crypto stocks higher on the day. And looking at the action this morning, we're seeing gains across the board. Now, Julie Hyman sat down with BlackRock head of digital assets, Robbie Mitchnick, and asked him about what this move means for investors and for the crypto industry on Market Catalysts.
Well, we are believers, obviously, that there is a role for Bitcoin to play in portfolios as a potentially unique diversifier and hedge of certain sort of left tail risks that exist in the portfolio. And so this, as an extension of the ways that investors are able to build their financial assets and build portfolios that include that, we think that's a positive thing. Obviously, it needs to come alongside education, just like everywhere else that investors participate in this space. That role in portfolios we think is appropriate at a modest level, where that diversification effect can still be a benefit, and so it's an encouraging development if so.
Is this a sort of step change, do you think, in adoption of crypto? I mean, 401ks, obviously, it's huge. If we're talking, if you put crypto into every 401k, that would be enormous. But what do you think that sort of pace of adoption could potentially look like?
Well, as you said, 401ks are a big part of how investors hold their assets. And one of the things that's interesting about this in particular is Bitcoin has been the top performing asset in the world the last 10 years. And a lot of investors, if you're holding it outside of a taxable or in a taxable account, outside of a tax exempt account, there's been a lot of accrued capital gains that have been incurred. And so one of the things I think some investors will be excited about for this is being able to potentially have this moved or held in a more tax efficient way.
You mentioned education being a big part of this, and I know you do a lot of that. At this point, now that crypto has become more institutionalized, more part of the zeitgeist, I guess.
Sure.
At this point, what are people asking you the most? What are they most worried about when it comes to crypto?
Well, I think there's a lot of confusion in the market over how to think about this in the context of portfolios, in the context of this idea of risk on versus risk off assets. That continues to be probably the number one thing that we hear questions from our clients about. As it pertains to Bitcoin, that is a fundamental question that's going to dictate how this is used in portfolios in the future and how widely adopted it is. Because if it is in fact a uncorrelated diversifier, which we believe based on its fundamental properties, that actually is the most logical conclusion, then it's a really interesting asset for all kinds of portfolios, right? Whereas if it's viewed more as a sort of risk-on equity-like instrument. That's going to be in a much smaller niche of the market that's actually adopted in. So I think there's a lot of education to do to clarify that, because as we've talked about, it's a global, scarce, non-sovereign asset that exists outside of the sort of country-specific economic, political, fiscal risk. But I think the market is early in sort of wrapping its head around that behavior and that nature of it.
Well, and it does trade along with equities frequently, right? Not always,
Sure.
but frequently. And is the trap that it risks falling into is that if people believe it is a risk correlated asset, it becomes a risk correlated asset because they trade it in that way.
100% perception can influence reality in this space. There's no question about it. I think what we see is that there's really two layers to this market. The top layer, which trades with a lot of frequency, tends to be more short-term, more retail, often trades with leverage. There's a speculative component of that for sure. They tend to view it more like equity. And so they'll sell it off alongside equities in the short term. But the bottom layer, which is actually bigger in this space, it just trades a lot less, more institutional, ultra high net worth, they view it more fundamentally from a long-term buy and hold perspective as this diversifier and potential hedge. And so we see this pattern over and over again. Short-term market dips, Bitcoin tends to dump with it, and then pretty quickly and pretty consistently you see it actually come off that.
Okay, coming up on Morning Brief Market Sunrise, a check on the consumer as we get into the latest earnings results from Under Armour and Wendy's. Well, before we go to the break, let's have a quick look at the US Futures Board. And as you can see, markets are edging up slightly there on what's been a pretty tumultuous week for Wall Street. Anyway, we'll be back in 2 minutes. See you then. Welcome back. Time now for some market movers. Well, we kick off with some earnings that have just come out. First up, Under Armour, the American sportswear company, with its Q1 results. Now, revenue came in at $1.13 billion. That was in line with expectations. Adjusted earnings per share, though, missed target, came in at 2 cents. Expectation was for 2.5 cents. The company's obviously says the CEO, Kevin Plank, saying in the release, despite ongoing uncertainty, our brand is gaining strength and we're executing our strategic plan and with clarity and confidence. But North American sales particularly weak there for Under Armour. Now, remember that earlier this year, the Under Armour did announce price rises to sort of cushion a hit from tariffs and has been focused lately on cutting promotions, inventory and its workforce after suffering 2 years of revenue declines. Around 30% of Under Armour products are made in Vietnam. The tariff rate for imports from there, 20%. Remember, at one point, the president was threatening a 46% levy. Okay, also out with the results is Wendy's, the fast food chain. It's just got its Q2 results coming out just now, and revenue missed the mark there. Came in at 560.9 million. Sorry, actually beat expectations at 560.9 million against 557.7 million expected. And earnings per share came in better than expected at 29 cents against the market's expectation for 26 cents. But, you know, Wendy's has had a pretty, even though it's beaten on both top and bottom line, shares initially did fall in pre-market. They are now starting to edge up very slightly too. It's facing increased competition, Wendy's, as we all know. And at the moment, the interim CEO saying in the release, in the US, we have work to do to improve the overall performance of the business. You know, Wendy's, I think it's fair to say, has struggled somewhat year to date, as we saw there, the share price down over 38%. And that is down to fierce competition in the sector. And don't forget, you know, just last month, the CEO, Kirk Tanner, he left the firm and he's to take the helm at Hershey's. Okay, for our last mover, we're going to focus on Tesla. Now, the EV maker is to disband its Dojo team in a move seen as streamlining its AI chip design work. The Dojo supercomputer was designed around custom training chips to process vast amounts of data and video from Tesla's EVs to train the automaker's autonomous driving software. Tesla has been undergoing a wide-ranging restructuring over the past year, with its share price slumping as sales of its EVs were hit by rising competition and a backlash by European consumers, in particular against Musk's political views. Now, while Tesla is the laggard amongst the Magnificent Seven, the other six are helping drive the gains on Wall Street. Despite concerns around the market concentration of big tech, Venu Krishna, Barclays head of US equity strategy, sat down with Josh Schaefer on market domination and said it's not too late to get in.
I think the tech story is very, very interesting, and we've spent a lot of time thinking about it. So for example, the standard refrain and the concern of people that they're very expensive, right? So on an absolute basis, that is true. But if you look at the trend over the last 2 years, their multiples actually have been steadily declining, moderating. On the flip side, their earnings have remained quite strong. So they've moderated from extremely high levels. They were printing in the 60s, in the 40s percentage growth, now to in the high 20s and 30s. So what's happening is they continue to grow into their multiples, and the street has been consistently underestimating their earnings power. That's why quarter after quarter, we have been a lot more positive on them. And I think since Q4 of 22, when they had bottomed, they were just recovering, that's when we went very positive on that. So that story is very intact. And what's even more interesting in that segment of the market is people are pointing to this dichotomy between them laying off people and yet posting great numbers. And part of the reason is while the rest of the economy is waiting for AI's impact to be felt in a more tangible manner through either increases in productivity or how it affects margins or top line, big tech is already implementing it in their core businesses.
Okay, before we go, let's check in on the market, starting in Asia, and it was a pretty mixed day across the region overall, but Japanese stocks rose sharply, the Nikkei up there over 2%. In fact, the broader topics index crossed the 3,000 threshold for the first time ever. SoftBank's better than expected results clearly helping the overall mood. But as well as technology firms, consumer cyclicals and real estate stocks did pretty well too. Turning to Europe now, and stocks are in the main mixed, I would say. Pharma and technology stocks are leading the way there. The FTSE 100 in the UK is just slightly higher. Remember, just yesterday, the Bank of England cut interest rates for the 5th time in a year as the UK economy struggles amid high inflation and a stagnant jobs market. Okay, let's turn to the US futures now. And US stock futures are edging higher as Wall Street assessing President Trump's nomination of Stephen Miron to the Federal Reserve Board of Governors and the close of the first day under his sweeping new tariffs. It's pretty fair to say that it has been a pretty bumpy ride for Wall Street this week. Let's have a quick look at the gold futures just to update us. As you remember, gold futures hit a record high earlier at over $3,530. Now trading a bit lower at just under $3,500. Watch out for that. That's down to the fact that President Trump has talked about tariffs. And that's it for Market Sunrise. I'm Ramzan Karmali. Go own the morning.